Hey guys, I hope you're well and welcome to today's Forex market outlook. It's Friday, October 6, 2017, and it's NFP Friday of all Fridays of the month. So it's going to be an interesting day, and what we're going to do in the next few minutes is to provide you guys with a quick overview on the Forex markets. Now let's begin with the Euro versus the USD. And a few days ago when we published our update, we said that around 1765 the market could roll over and that the trend was bearish. You can see that the market indeed did roll over around these levels and it's now touched the first support level. Now a support level is also a level where traders are booking profits, and I suspect that that's probably what they're doing right about now. And on a break to this low level, which is the 1689 level, the market can continue to the next level, which is 1662, followed by 1613. Now there are some risks of selling here, and the first risk is the fact that the market already climbed quite a bit from yesterday's levels, so it's slightly oversold. And then of course you have the non-farm payrolls numbers coming up this afternoon. I think in general with the non-farm payrolls, what you want to be looking at is wage growth. If wage growth prints 0.3% month over month, then that should be good for the dollar and should really keep it in place. Because that's really what we're looking for, because the unemployment rate in general is around 4.4%, so it's a very low level, so it's not going to decline much further from those levels. It's not going to go to zero as an example. So the focus is more on wage growth. And then you have, of course, the actual headline number of the non-farm payrolls. The anticipated outcome is Katrina and so on, Hurricane Irma and Harvey. It's likely really that these numbers could be, around 90 level, but of course they might even turn negative, and I guess if it's like negative 50 or something like that, that the market would react in a major way. Trading the NFP in general is just not the easiest things to do. But the thing is this, look at the data, and if the data is not terribly bad, if we have some sort of a pullback up to, I would say, 1734, which is this level here, then I think the market could potentially just roll over between 1734 and 1789, and then just look to touch the next support level, which is 1662. In the case of the pound versus the USD, the market is bearish in the short term. Market took out the 3145 level and it's probably not targeting the 130.30 level. Here, because the market is short-term bearish, it's quite likely that the market will be quite interested to see some sort of a pullback, maybe 31.77, 132. And here, I doubt really that the non-farm payrolls results are going to matter in a big way. I think it might spike down, but eventually remain around the low, so not a very good report. Or if it's a bad report, you'll have quite a big squeeze, because I think the market needs to go up to about 132 or so before rolling over. The market will remain short-term bearish below 132.92, which is this high here created on the 4th of October. Here's your dollar yen, and the dollar yen is being supported by the 112.19 level. As soon as we start to approach that level, like 112.50, the market looks to go long, and the highs here are resistance. So some traders that have been trading this range are most likely booking profits here, and now they have the option to keep this position for a break to the upside. But again, to see that break, the data from the US this afternoon needs to be better than expected. If we take out the high, which wouldn't surprise me because of the bullish trend, we could potentially reach 113.59. On the other hand, if the market pulls back down lower, the traders might see this as an opportunity to go long. Again, what's important here is really how good is this report? Is it, or how bad is the report? Because a pullback will most likely be generated by a bad report. So if the numbers are really bad, then obviously it's not the best opportunity to go long here, because if we take out 112.19, then the market could decline to 111.46 by Monday afternoon. Here's the Aussie dollar versus the USD, and the market did try to turn bullish yesterday and the day before that, on the 4th, and the market took out this high, and that ended the very short-term trend. But that was just a short-term fluke really, and the overall trend remains bearish, and it will be bearish below 78.75, which is the October 4th high. We now took out the 77.84 level, and the next support level is the 77.12 level. We had a breakout this morning, but obviously the market bounced up a bit because the market had already climbed by quite a bit from the highs here on October 4th. I think the market can move up a little bit higher, maybe up to 78, 78.20, but around these levels, traders are probably going to be looking to sell again with stops above 78.75, and I suspect the market can roll over from these levels and then move down to 77.12 again, which is the next support level. Here's the NZD versus the USD, and the market here is bearish, and we've been bearish as well here, as you know, given the outlooks over the last earlier this week. I think now the trend defining level is about the 72.08 level, which is just above the October 4th high. The market took out support that will be the 71.29 level, and the next support level is the 70.54. A little bit like the Aussie dollar is a bit oversold, so you can have some sort of a pullback probably to this low here, which is the 71.44 level. But around these levels, I suspect the market is going to look to roll over and eventually hit 70.54 as long as trade below 72.08. As with all the other markets, when you're looking at this, if the NFPs are really bad, again, say a near zero or negative and a headline NFP number, and wage growth is say 0.1 instead of 0.3 anticipated, then you know you have a problem, and most likely you'll have a bigger squeeze which will last until Monday, Tuesday. And in some situations, it could potentially end the trend in some of these markets. And here's another one, is the dollar CAD. And the dollar CAD bounced nicely from the lows here. This is a really good opportunity to book a profit, especially if you went long here around these lows. You got the 126 level, and the next resistance levels beyond that is the 126.66. Now, to reach that level, as you probably guessed, the known from payrolls has to be quite good, or we need to have some sort of a panic just ahead of the event where you see the market booking losses by traders being short the dollar CAD. Something as well which is important to remember is that today you have Canadian dollar numbers, so Canadian NFPs, right? And with the NFP from Canada, you need to look at both sides. So you need to see what's happening with the US NFP and what's happening as well with the Canadian NFP. Here, the new support level and the trend defining level is the 24.47 low. And I would guess that if we pull back maybe to this little lows here around 25.15, 25 level, the traders might look to go long again, given that the known from payrolls are not terribly bad. If they are bad, then most likely, you know, we're gonna take out the low. And if we take out the 24.47 level, we'll probably target the 24 level. And at that point, we're gonna have a big bearish engulfing candle on the daily. And that could potentially be the beginning of a decline down to 123.24, and that will be the end of the dollar strength for the last week or two. So it's going to be an interesting day. We just cover all the main markets so you know which levels to focus on. Again, as long as the data is not terribly bad, most likely the dollar will continue to remain strong. On the other hand, if numbers are bad and you start to see all these levels crack, then that's an indication that the dollar may have peaked full in the short term, and that will probably translate into further dollar losses for next week. Thanks so much for watching this video, and don't forget to subscribe to our YouTube channel. We do upload several videos a week, and every time we upload a video and you subscribe, then you'll get a little notification that we just uploaded a video. It's free to subscribe, you just need to have a YouTube account. Thank you so much for watching this video, and again, don't forget to subscribe, and if you have any questions, do reach out to me at AlexFXOO or at tradecaptain.com, where we have a contact form. Thank you very much.